Play.
It's a weak start, no doubt. We're down over 300 points for the Nifty futures as we speak right now. Breached the 24K mark for the Nifty spot, and the futures 23,894 is where we're currently at. When it comes to the Nifty 50 as we speak. Titan, Interglobe, SBI, these are your biggest casualties. But it was a good set of earnings for JSW Infra for the quarter gone by. In fact, Sajid did speak with Rinkesh Roy, the joint MD and CEO. Here's a slice of their chat.
Yeah, you are absolutely correct. And it was, the aftermath of the crisis in the Middle East. And one of our terminals in Middle East was affected by it. So despite the strong headwinds that we faced, we are very India focused. So our India operations really did well in that period of time. And we were able to deliver on our earlier, projections for EBITDA of 2,600 crores. So we stood by that and we were able to deliver. I think that's been the biggest success that we could do in that period.
Have you assessed the kind of damages that has happened and how much will it take for you to get them to normal level?
So currently the situation, is still volatile and personnel are not able to come freely and move across the terminals. But we were, out of the total of 15 tanks, 3 were damaged. And we expect 50% of our operations to be up and running very shortly once the situation, comes to some degree of normalcy, which I think it's not very far off. In a phased manner, another 25% after that. And finally, there's 3 tanks that will be somewhere rebuilding it. It will take a longer time.
And you've set yourself an ambitious target of doubling your EBITDA by FY28. How do you plan to do that and what will be your capacity once you do that?
So, you see, currently we are at 182 million tons per annum capacity in the ports in India. And we are looking to touch 300 million by FY28. And then onwards by FY31 to 400 plus. So that's, a movement from 180 to 300 and then 300 to 400 plus. So 180 to 300, all the projects are on ground. It's not, kind of something in my mind or something on pen and paper. They're all rooted on ground. Projects have started. Like, I'll just give you an example. One of our major projects, like the slurry pipeline, it's a 303 kilometer long pipeline. So we have already laid underground 235 kilometers of it around a week back. So we are on course to deliver that project by March 27. Similarly, Jatadhar Port, which is going to come up there in near Paradeep in Odisha. So that's also in a very substantive degree of progress has been achieved. The berths all the piling works on the berth have been completed. Around 7 million cubic meter of dredging has been done. So the point I wanted to put forth is that these are things that are actually happening because already the clearances are there with us, the land is with us. So the things are moving on a very speedy way. And we expect by FY28 we should be touching 300 million tons per annum port capacity. And then on we'll add another 3 more greenfield ports. And these will take another 2 to 3 years post 28. And in between, we have a lot of privatization projects that are coming up by the government of India. So that we have not added into this capacity. So that's a plus on that. So we are fairly confident that we'll be able to add on this huge capacity because if you look at it, it's roughly doubling the existing capacity. And our aim is to go up to at least 3x. So
and that's over a period of?
Around FY31.
FY31. You're setting up this entire facility by FY31. What is the kind of capex that you're marking for that?
So the total on the ports, we had earmarked around 30,000 crores. And on the logistics segment, where we are rapidly ramping up, another 9,000 crores. So a total of 39,000 crores we are looking at a spend up till 31, out of which we have already spent 6,300 and another 5,200 we have committed. So in the commitment means that I've already placed orders on the machinery, long lead items, on the civil contractors. So these are, roughly you can say 11,500 to 12,000 crores of that Capex has already been, in a way kind of done. So another 15, 20,000 we'll have to see that they are coming up progressively.
And will that be a mix of debt and equity, or?
So it will be a mix of debt and equity. So generally we follow a 70-30 proportion. So that is the way we'll be looking.
How are you managing your debt at this point in time? Because currency is depreciating, that's putting all additional pressure on you.
So we have actually income which is called VRC, so vessel related charges. So these are approximately, they range from 15 to 18% of our revenue. So these are dollar denominated. So that is one. So we get a dollar income. So that is a natural hedge kind of a thing that we already have in our mix. And the debt total today, our gross debt is around 6,400. But 3,300 we have in cash and in banks as on 31st March. So the net debt is around 3,100. And the debt to EBITDA ratio is around 1.2. Our guidance was for 2.5. In between, we expect it to cross 2. But it will be not for a very long period, well within our guidance figure of 2.5.
So basically what you're saying is that as you increase your capex and the cash flow comes in, and the cash flow is then funds your further capex in place.
Absolutely.
But the foreign denominated debt that you have, is that something a concern? Are you looking at converting them into rupee debt?
Yeah, what we are looking at is a part of it, we are looking at, getting it refinanced. So when it comes up, so that would be the strategy. Part of it would be a natural hedge on the earnings that we are getting. And a part of it will be looking at refinancing it. And then also we'll be paying off, rather than paying it off in one shot in a year, we'll be looking at, kind of retiring the debt in every year. A part of the debt we'll try to get it retired.
Last year you acquired rail logistics companies, which is there. How is that integration working, and what kind of contribution is bringing to your top line?
So that, if you see, that gave us in the 2 months, that from 1st Feb to 31st March, it gave us a EBITDA of around 25 crores. And it's been doing very well. After we took over, the turnaround time has improved. The efficiencies of that rakes have improved, because that's what we do. Yeah. So that made a lot of sense to have it with us. And it gives a wider bouquet of services rather than only getting stuck on containers. So you have container plus domestic cargo moving together. So that's been a very good success story for us.
You also guided for a revenue of 6,850 crores for FY27. Is that a conservative estimate, given the kind of fact that you are adding so much of capex? And
no, you are right. It's slightly on the conservative side, because we are also looking at a rapid ramp up on our logistics place. So what has happened? We have placed orders for 40 more rigs. So our current fleet size is around 42. When we started this journey around 1.5 years back, it was 8. Yeah. We have now made it 42. We placed orders for another 40 rigs. Now these 40 rigs, we expected it to come at the fag end of the year. But what we are seeing is that it will be delivered quite early. So that will be a rapid ramp up that we're looking at in the logistics space. Plus whatever capacities that, like, we have now got permission to operate Kolkata Terminal. Yes. So that again gives us that added leeway to further add on to the top line, to the EBITDA. So these are the measures that we're looking at.
Do you need to invest further in the Kolkata Terminal?
Yeah. We'll have to build a berth. We'll have to, get it rectified into a straight line. So that's, but one berth is already ready for operation. So we have moved the equipment there, and we got the permission from the port authorities as well as customs to start operations. So that, I think we had given a press release and information to SEBI, so that we should be starting it very shortly.